Vienna. You've been there for last 3 or 4 days now. What is the sense that you have been picking up in sense of OPEC, the body language, and the kind of agreement that they have finally reached into? How sustainable does that look to you?
Well, I think when you look at it, Manisha, it's quite simple. There's been a level of coordination across all of the members and the non-members. 24 nations. I'm noticing, how Russia's positioned itself, and certainly it seems to be a very concerted effort to look at the production side, understanding where Iran sits in Venezuela, and more importantly, as a cohesive unit. And there is no doubting that I think moving forward they will remain with that consideration as far as Russia being there. And that's the big picture. I think that OPEC, a couple of years ago, you may have said it's getting weaker. I think from now moving forward, it looks like it's getting a stronger unit, a stronger body, and a stronger cartel.
Well, that, of course, is the initial comment coming in from all our guests there, but we do need to take a very short break at this point in time. The final agreement has been now stamped by all 24 oil producers, is what we understand. Today was, of course, the most important meeting, because what OPEC agreed on yesterday has been stamped upon and agreed by the non-OPEC countries, which also are other 14. But we will go for a very short break, come back and tell you what this really means for the rest of 2018 in sense of demand, supply, and the global prices on where you can expect them. Welcome back. Well, we are discussing the breaking news with you, where the final and the third day of the meetings in Vienna have concluded, and all the 24 oil producers are on the same page, including Russia, which is the top producer in the world, saying that they are willing to increase 1 million barrels per day, even as they wanted 1.5 as the number to come in. But Peter, coming back to you really, the next meeting now would be on December 3rd is what the OPEC tells us. With this major event out of the way, what is your sense? Will the markets now start looking at the global demand-supply picture yet again? Because as far as the supplies go, there is still a bit of a concern, especially given the fact that the global trade relations between the two major economies are clearly a view of uncertainty there.
Well, that's exactly right, Manisha. I mean, when you look at it from a geopolitical side, there is certainly so much uncertainty, and that really captures, the Iran of Venezuela and the US picture, the trade talks and the sanctions, and of course what's going on with President Trump in China. So you wrap it all together, then you look at the refinery outages over this normal, May to June, July period, and then you're dealing with Mother Nature with hurricanes for the shale side. I think there's going to be probably, as far as price, some whipsawing. You'll see some profit taking, but it's a nice move up, naturally what we saw in New York trade overnight. And where it moves for Monday and Tuesday will be quite fascinating. I think it'll probably settle down a little bit, but I think it'll edge higher over the next month or so.
And what, Peter, are you expecting a reaction coming in from the US president now? Because he's been asking OPEC members as well to increase production. Will 1 million barrel per day of an increase really fit that bill?
I think he wanted more. There's no doubting that. But he also understands, as far as, if you look at US shale, it's about max capacity, they're saying, for the next 12 months. There's pipeline issues there on the Permian Basin. So, whilst the US has had dramatic growth, there probably will be more rigs coming online for the shale side of things, leading into Q3, Q4 of 18. And while prices remain high, there's naturally going to be more operators coming to line. So I think leading up to the next meeting, it's a sense of goodwill. It's a sense of that things are far more positive than they were 12 or 18 months ago. And where price goes, probably going to edge up higher. Manisha, I think they edge up higher from here.
Well, yes. I really want to come to each of you now to get your comments on, from here on, what is that thing that you would want to watch in case of crude oil in sense of prices, and also where do you see the prices for the rest of 2018? Ms. Wynn, I would want to begin with you now. For the next 6 months now, for the crude oil, as an investor, as a trader, as an economy watcher, what is it that you would want to watch in for crude oil prices, as in sense of fundamentals, and where do you see the prices headed or ranged for the rest of this year?
Yeah, so I'd start with monitoring demand, because that's the key concern our clients have at the moment as well, because the whole story of synchronized economic growth, etc., is falling apart. Emerging markets aren't doing as well, and the high price is also an issue for oil demand, and we're increasingly starting to see preliminary data starting to weaken. So I'd say the key thing to look at now would be the demand side, and in terms of how OPEC is increasing production. U.S. supply growth is constrained because of the infrastructure issues there, so that's very much a given. So I'd still say it's the macro economy that's really worrying me at this stage. In terms of prices, I'd say politically there's an interest to keep prices below $80 a barrel going into the U.S. midterm elections. Key consumers such as India, where the oil minister has made specific requests as well to OPEC, given the sensitivities. I think the consumer pain band is being touched at $80 a barrel, and OPEC's going to try keeping the prices below that, at least for the next 6 months. So I'd say a price roughly around $70 a barrel would be a fair price for the next 6 months.
All right. A fair price in crude oil is something that we always keep finding, though, Ms. Wynn. But Mark, coming to you as well with the same question, what would you want to watch out for crude now? Because clearly a lot of consumer countries like China, India, Japan, etc., wouldn't be very happy with the kind of supply increase that we have seen come in from OPEC, because the expectation has been higher. We've been asking for more stability here. What would you want to watch on from here on? And also, what is your price range for the rest of this year?
Yes, for the coming 6 months horizon, I think the most important thing that I will pay attention to is the macroeconomic equilibrium, especially given the constraint of the global trade war concerns, because you can see that it might affect the demand side. But also we have to look at the equation from the monetary policy changes, especially the Fed is going to have a more the faster than expected inflation interest rate hikes. I think it is very important for attracting the money flows back into America. So the overall situation should be better for different countries in the world if the production of the crude oil is a little bit moving up, and I think that it might lessen the pain for different countries, emerging economies as well as the others. I think it is good for the equilibrium, at least for the moment. But overall speaking, the nominal production amount for according to the OPEC agreement, I think it is one thing, but it is the enforcement or the execution that matters in any kind of a similar situation from the context of a game theoretic analysis. So at this moment, I think the overall situation is a little bit better than expected.
Well, that really is the view coming in from all our experts, that what the OPEC and the allies have done is, of course, stayed on the same page, stays on the same course and direction, and the prices from here on perhaps will see more consolidation. What we still are missing in the meeting yesterday and today, of course, has been the fact that how much will each country produce? Is there a quota being changed for the OPEC and the allies? Those finer details, of course, haven't really emerged yesterday or even today. But before we end the show, and thank you, gentlemen, so much for giving your opinion, etc., to us. Before we let you go, let's hear on what the Russian minister and the final meeting today had to be said in sense of excerpts.
In the current market conditions, I think it's of utmost importance that we show the market that we are ready to once again take decisive action, but also one which answers the needs of the market at the current moment. Keeping this in mind, I believe that it is a very timely and a right recommendation by the JMMC, which was voiced 2 days ago, and that is increasing production by OPEC plus countries by 1 million barrels in total, splitting this pro rata. I think current market dynamics, supply and demand balance have made this decision ripe, and this decision would help support the balance which we currently see.